Hi, everybody. Welcome to the Market Minute for the week of November 8th, 2010. This is Scott Miller with River City Mortgage and Financial, and I want to share some things for consumers about refinancing, but also for realtors on how you can go out and get some business or start having a good contacts with your customers over the last 3 years. Obviously, with interest rates low, mortgage companies are just inundated with a ton of people wanting to refinance. And I know the real estate market kind of shuns refinancing only because we're focusing on new purchases and people who want to make buying and selling decisions right now. A great way to go out. So first of all, I want to talk about to a consumer. And by the way, realtors, you can use the same strategy, but I want to make sure and tell you how to use that with your customers. But FHA and VA loans, it's easy to refinance them without an appraisal. Obviously, the concern over the last 3 years, even go back 4 or 5, is with the decline or softening of real estate values. FHA and VA can do, and for that matter, so can conventional, but you can do a loan with no closing costs, no employment verification, no qualification, no appraisal. So it's a great way for the consumer who has an interest rate of about 5.5, 5.75, or higher, that now's the time to refinance. As a realtor, you may want to call those customers and remind them that they can take advantage of refinancing, improve their current financial situation. It might make it a little bit easier in the future to sell if they have a lower fixed rate loan, and we'll wait and see as the values come out. Will assumptions be, will it become more valuable? FHA and VA loans are still assumable with qualifying, but that might make it easier if somebody's in the 4s and if there's not a big spread between mortgage amount and value. So it's a great way to do that. Number 2, if it's a conventional loan, there are some changes in part of the stimulus package that allow for us, for consumers, to take advantage of conventional loans if the ultimate investor is either Fannie Mae or Freddie Mac. That is not the person that you're selling your loans to or making your payments to. The person who is collecting the payments, the servicer, may have already sold that loan still to Fannie Mae or Freddie Mac, and that one, there are some different loan amounts or loan values that we can still refinance to. So again, if you're a consumer, make sure you call me 763-509-7400 or get me on the web via email. Email at smiller@rcmortgage.com. smiller@rcmortgage.com. For realtors and financial planners, insurance agents, those that watch this or receive this, make sure to call your customers over the last 3 to 5 years, remind them to take advantage of this, and then also you can ask them for referrals. Ask them who they know that's making a buying or selling decision right now. So I think there's a great opportunity for everybody in the industry to contact their customers. For consumers, even though your values may have dropped, there still might be a way for you to take advantage of the lower interest rates and improve your financial position. If you have any questions, don't hesitate calling me, 763-509-7400. Thanks very much, and make it a great week.